Hey, how are you today? This is Josh Patrick, and you're at Cracking the Cash Flow Code. And today, my guest is, and here we go again. I do this all the time. I don't like this. It's Kathryn, and Kathryn is the founder of Kabbage.com, and I am drawing a blank on her last name, and I am embarrassed by this. So instead of going through a long introduction, we're going to bring her on, and she can tell us her last name, and I can be really embarrassed. So, Kathryn, welcome to our show.
Thank you so much for having me. I really appreciate it. And don't be embarrassed. My last name is Petralia.
Petralia, that's it. And it's a very nice last name, too. Anyway, Kathryn is the founder of Kabbage, and you may not know what Kabbage.com is, so we're going to tell us a little bit about that. And then we're going to go into a conversation about how you can get some money into your pocket if you need to borrow it, and what is the most effective way to do that if you're a small, blue-collar, privately held business. So, Kathryn, how did you come up with the idea of Kabbage in the first place, and what need did it fill?
You know, Kabbage has been a technology company from the very beginning. In fact, the idea occurred to my co-founder, Rob, because he was working with an eBay API that allowed third parties to get access to seller and transaction level data, API being it's called application programming interface, but it allows two parties to connect and share data. And so that was in 2007. He thought, wow, that's really interesting data. I wonder if he could use it to figure out how to make a loan to an eBay business. And so that's how we got our start automating small business loans to folks who sell on eBay. And those were small, very small businesses. And since then, we've really expanded to serve all small businesses as more APIs have become available and we have better access to data. But we've stayed committed to the idea of getting our customers through the process in under 10 minutes every single time.
So, do you guys actually loan the money, or do you work as a front company for other companies that they actually borrow from?
That's a good question. There are a lot of different ways to structure companies like ours. There is always a bank behind these loans that have historically been issued by Kabbage or originated through the Kabbage platform. So Celtic Bank, prior to the American Express acquisition, issued every loan that we made. And we actually took the balance sheet risk, if you will. So even though we securitized our receivables, meaning we had third-party investors that gave us access to funds that we used to fund the loans, we took the risk for those loans. So we stood behind them.
So what was your process, or what is your process for finding out whether a business is credit worthy or not? And if a business is not credit worthy, what should they be doing to fix that?
Credit worthy is a really loaded term, I think, for a small business owner. And it is the case in consumer lending as well. But we tend to serve the smaller businesses. So of the 30 million-ish small businesses in the US, 90% of them have fewer than 20 employees, 80% have fewer than 10. This has always been the market that we've served. We've always served the very smallest businesses. And so it's interesting, 100% of our customers, not only through our core lending business that we operated for many years, but also through the PPP program that we ran through its end in August, 100% of those businesses had access, and that's more than 500,000 small businesses through both of those efforts, had a bank account, but they couldn't get a loan from their bank. And so the bank didn't think they were credit worthy, but not because they're bad people and not because they didn't want to help their customers, but because it's really hard to figure out how to underwrite a very small businesses. We do that based on cash flow. So we're able to see through the data that our customers share with us, how a business is performing. We're able to see historical cash flow data and to predict future cash flow data. So understanding what kind of cash flow businesses have has always been really important to us, and actually informed a whole new set of tools and products that we launched to help support cash flow management for small business, because we realized that businesses were frankly borrowing too much, holding the money for too long, and spending too much on fees. So our goal was always to help them manage that. And I think if you're a small business owner, one of the most important things you can do is separate your finances. It's really hard to do. You have a personal credit card maybe that you use to make business purchases. And if you're highly utilized on a personal credit card, it can lower your credit score and make personal borrowing more expensive and make it harder to get a small business loan too. So segregating your business and personal finances is rule number one. And number two, make sure that you use a tool, use a platform to manage your accounting, to manage other aspects of your business. There are so many available today, and that allows you to be more organized and to basically present a more organized picture of your finances to a lender.
And I have something else to add to that, because this is one of my soapbox things, is that I believe so strongly that if you're going to be in business, you have to be able to learn to speak a business language of business. The language of business is finance. And the most important piece of finance you can look at if you're a small privately held business is your cash flow statement, not your profit and loss statement. And the problem I see with most private business owners, they don't have a clue on how to read their cash flow statement, because when you look at it from the first time, it makes absolutely no sense.
You're exactly right. And I think that for most small business owners, they get into their business because they love what they do. They love their vocation, or maybe it's a family business, but they didn't get a graduate degree in finance because that just wasn't part of the process. And so I think it's hard to learn all of the jargon. It's hard to learn those tools. And I think that's why we exist, because we really want to help those small business owners focus on what they love and spend less time worrying about cash flow.
But if they don't worry about cash flow, they're going to join the 50 or 60 or 70% of businesses that aren't here 5 years from now.
Well, worrying about it and having to manage it are two different things. And if you have a good partner that helps you manage it, then you don't have to worry, because you know that you're going to have what you need when you need it.
So out of curiosity, how do you folks help people? Well, actually, I have a question first. Of the 500,000 businesses or so that can't get a loan from their bank, how many of them bank with a money center bank versus a regional bank or a community bank?
That's a great question. And by the way, the 500,000 is just the customers we've served. There are
Yeah, no,
many, many more
I'm
millions of
talking,
them.
I'm talking,
Yeah.
there's 28 million businesses or so in the United States, and only 6 million have any employees at all. So it's a big number, and you're dealing with a small number. I get that.
So about 80% of our customers bank with a top 10 bank when
And
they came to us.
that is such a huge mistake, in my opinion. I mean, they don't care about you. All you are is a credit score to those folks.
And that may be true also, but frankly, with smaller banks as well, it's hard to get a small business loan if you're very small, because the fact of the matter is most of these really small businesses don't need $5 million. They need $50,000. And it costs even a community bank the same amount to underwrite a $50,000 loan as it does a $1 million loan or a $500,000 loan. So they tend to focus on the larger ones, and smaller businesses are just perceived to be risky.
Well, that's also true. I live in Vermont, and all businesses, basically, except for about 30, are your size customers. And we have several community banks that they actually specialize in loans under $100,000. And that's what they do really well. But the truth is, most people get stuck in the money center bank syndrome, where you're a credit score and that's all you are. And your type of service, if you're actually doing cash flow lending, which is what I think banks should do all the time, you're putting yourself in a way different position than most people. So it's really important for our listeners to know what cash flow lending is and what type of results do they need before you're willing to loan them money. So could you talk about that a bit?
Well, a big part of it is longevity. So we want to see that you've been operating your business for a year. But if you've been operating longer, having visibility into that data is really useful for us. But getting a spreadsheet doesn't help for us. We really need to see real-time third-party verified data, and we can see that in your checking account. And so what we can see is the dollars coming in and the dollars going out and the delta between the two. And that is what we need to understand, what you can really accommodate, how much of a loan really makes sense for you based on that net number and what we predict that net number to be going forward. So you can get that data from a lot of places. You can sometimes see it in your ledger, you can sometimes see it in your accounting platform, but you can definitely see it in your primary business checking account.
Yeah, my father used to call that checkbook accounting. We used to be in the food service vending business, which was a cash business for all intents and purposes. And if the checking account was growing, you were doing well. If the checking account wasn't doing well, growing, you had a problem. It was really that simple. And it's true in a lot of businesses. If they just look at what they've got, for booked business versus what they have for receivables and cash, they're going to know what the future looks like for them pretty easily, it seems.
That's true. And what's also really interesting is the use of funds is important. understanding what you need to do with the dollars. And there are a lot of different examples in a lot of different industries, but most of our customers have tended to use it for growth opportunities. Maybe you're investing in a new location, or maybe you're investing in an improvement to your business establishment, or maybe you're investing in marketing to drive new traffic. I love the example of construction because it just demonstrates a really important cash flow gap. And so most construction businesses are, especially the smaller ones, they're doing work and they're hiring people and buying materials before they get paid. And so the issue is they really want to make sure they have the best people working on their teams. And if they don't pay them, they can't keep them. So they have to have funds to manage paying all of those bills before they're going to get paid by the folks for whom they're doing work. And so there's always this cash flow gap in construction. But if you have access to that capital, then you can say yes to a larger job, and you can invest more in those materials and in those folks to work on your teams, so you can continue to grow your business. And even though that sounds like managing through a shortfall, you're really managing for growth.
Yeah, well, as I've always said, and this is one of my mantras, is growth is expensive. Because you have to buy material, you have to have finance receivables, you have to finance inventory, you often have to finance bodies, people working for you before you really need them, so they're available when you have the growth. And as you go through the stages of growth, you need other people in your company who it's going to take 6 months or a year for them to be making you any money, and you have a way to finance that. So when I was in the world of trying to borrow lots of money for running my business, I found out really quickly that the bank would love to loan me money, but not 100% of what I needed. And I assume that's the same with you.
It's really hard to know what someone needs. We don't actually say, hey, tell us how much you need and we're going to get back to you with a number. We literally look at the data and make a determination about what the access amount should be. And so I don't know the answer to the question. I mean, obviously a lot of customers call us and they say, hey, could I have a bigger line? Could I get more access? We hear that a lot. But we sometimes, all of us have our eyes somewhat bigger than our stomachs. And so I think we all have really grand ambitions and we want to be able to invest in them. But our job is to make sure that people are going to be able to satisfy that obligation. That's really important. And we have an obligation to our customers to make sure they can do that.
So when you do your loans, are you doing mostly lines of credits, or are you doing term loans also?
All lines of credit. And so it's kind of a weird structure, because it started because we were serving eBay businesses. And what we knew is that they were generally using the capital to buy inventory. So that had a short-term return. So what we did was create a line of credit, but every loan is its own installment loan, so to speak. So they all amortize independently. And what we like about that, and what our customers like, is we can predict for them exactly what their fees are going to be over their duration of the loan. And so we've kind of stuck with it because people seem to like it.
So what kind of interest rates do you guys charge?
So our average, calculating that is interesting because a lot of our loans are under 12 months. And so that sort of artificially inflates the APR. And so historically, our average effective APR has been in the low 30s. And, obviously there's a range there. But if you think about the cash, the fees that people are actually spending, it's much lower than you might see with traditional credit cards. APRs are really hard to calculate for shorter term loans. But we disclose that on every single time our customers borrow. We tell them exactly what the total dollars are they're going to spend in fees, how much they're going to pay every month in fees, and what their effective APR is for borrowing.
Mm-hmm. So are you still, I assume American Express is now providing the capital for your loans for you guys?
And we have not launched yet with American Express, or relaunched, if you will, that product. So we're still in the process of working that out and how it's going to work and who we're going to serve.
And I assume you're not at liberty to tell us what those conversations look like.
And I am not, and I'm sorry about that. I am an incredibly transparent person. So going through this sort of change of communication style is challenging for me too.
Well, actually, I just want to pivot this for a second, because I think it's a really interesting thing. Before we started recording, you said, well, it's hard for me to get used to having a boss. And I have coached a few hundred people selling their businesses through the process of leaving in moving through what we call seller's remorse. And often it happens, the founder or the person who owns the business when he sold it, they find out that they really can't stay there for after they've been sold because they don't work well with a boss because they never had one before. Are you finding a challenge with that, or is that something you don't want to talk about?
No, I'm happy to talk about it. It's weird. I'll tell you exactly how it manifests itself is weird. We are, and then I want to talk a little bit about American Express because it's just such a lovely company. But we were in a meeting, my co-founder Rob and I, and we were in a meeting with our boss. And it was kind of clear that the meeting was over. And Rob texted me. He was like, I really want to end this meeting. I think the meeting's over, but it's not my meeting. I can't end it. So like not even being able to end a meeting, is kind of a funny story or a manifestation of that. But I have to tell you, we're so fortunate. American Express has really shared values with us, caring about the customer, caring about one another as employees. They are just such a strong, thoughtful, really smart and caring organization. It's not a shock exactly. I've been an American Express card holder since 1989. I was 4 when I got that card. But no, I wasn't. I was 18 years old. But so I love American Express as a customer, and I love it even more as now an employee. They're really a lovely organization.
Cool. I've heard great things about American Express over the years, and they are an incredibly well-run company, or they appear to be anyhow. So their reason for buying you was?
So they have a goal of moving, beyond the card. First of all, as you know, American Express has historically been focused on cards, and also this notion of digital first and digital transformation is important to them as well. And we already had a platform that could help them serve small businesses in a way that's truly automated, that allows them to expand the customer base that they're serving and serve them more effectively. So, and create a better user experience in the process. So American Express serves, as many small businesses in the US as any other financial institution you'll see. And so it's an important constituent to them, and this allows them to continue to serve those customers even better.
So when you were in the process of deciding who your buyer was going to be, did you talk to some of the money center banks also?
We have, we've been around for 12 years. We've talked to everybody over the years multiple times. So
Right.
That's certainly been a conversation we've had. Yes.
Yeah, it seems to me that the money center banks need to open up a separate bank that deals with small business if they actually want to serve that population, because they do a really terrible job, in my opinion, of serving. It's almost universal. If I have a client that comes along who happens to be at a money center, and by the way, for those who are listening, money center are the 10 biggest banks in the country, like Citibank and Bank of America and Wells Fargo, who behave so well.
You can say a lot more about that than I can.
Well, I can't resist, frankly, but
it is irresistible.
But the truth is, almost 100% of the time, we move them away from those banks because they don't serve their needs. For some reason, small businesses think they need a big bank when they could use a tiny community bank and never get past their lending limit. And I'm assuming the same is true with you.
Well, I think a lot of customers come to us because they aren't getting what they need from their bank. And it's funny, that's one of the reasons we launched in August a checking account for small businesses. You can come to the site, sign up for a checking account, get access to it in less than 10 minutes with a 1.1% APY and no overdraft fees. Well, we learned, I didn't even know this about small businesses and about checking accounts in particular, but a lot of our customers were forced to go to check cashers to get earlier access to their funds because the banks were holding their deposits for so long and they needed that cash flow. It was important to them. And that just shocked me that they would spend 20% of the face value of a deposit because they really needed the capital. And it's not because they're desperate. It's not because they're subprime. It's because they're trying to run a business. And so we wanted to provide a service to them that would help them avoid that.
Well, it's a huge profit method for the large banks because they're pretending we're back in 1978 and 1980 when it took 3 to 5 days to clear a check through the Federal Reserve System. Now it takes like 12 seconds. So one more question, we're almost out of time because this is something that just occurred to me, is that where is the blockchain fitting in which is Bitcoin and Ethereum and all the cryptocurrencies with your thinking. More on the administration side of the lending than the currency itself, the blockchain
Okay, good.
as a methodology, not the cryptocurrency part of it.
So I am a fan of a distributed ledger. I think the idea of reinventing the ledger is fantastic. I'll tell you, the first time I ever saw this was many years ago, and we share a common investor with Ripple. And I saw a Ripple demo, and I was like, this should put like Western Union out of business. Being able to instantly move funds between institutions around the world and settle at the end of a day without actually moving anything, I thought it was, incredibly clever and disruptive. So I think that there's a lot of value in the blockchain. There's a lot, smart contracts, being able to, the public encryption. And I feel like there's a lot of value from a ledger perspective in financial services. The cryptocurrency itself, we can talk about that another time. I'm not super bullish on that.
Yeah, well, who knows what's going to happen? I bought a little bit just to see what's going to happen for fun, and frankly, I don't plan to touch it for 10 years, and we'll see what happens 10 years from now. But the truth
sorry, go ahead.
Go ahead, Kathryn.
I was going to say, someone gave me like a quarter of a Bitcoin probably 8 or 9 years ago, and I don't know where I put it. I totally lost it. And then it went up a lot, and it was like real money at one point. I was like, damn it, what did I do with that? Anyway.
Well, it's the thing that I think is important is for the businesses who are in the traditional ledger. They need to be thinking about what their next act is going to be, specifically the title insurance companies. Title insurance is going to be a thing of the past in 10 years. I mean, it's going to still exist, but it's not going to go through the way that it's going to be on the blockchain. There's no reason for it not to be, and it's simple, easy, fast, and way cheaper. So,
agree.
At any rate, that's my thing. So, Kathryn, this is really interesting. I appreciate you being on. I rarely get people who are founded what we call unicorn companies, which are companies that become fabulously successful, find a huge buyer. Hopefully you got billions of dollars for your business. I might look it up someday, but so I appreciate you spending time with me. How do folks find Kabbage, and are you interested in talking to anybody about your journey, or if not, that's fine also.
As I said, I'm pretty transparent. I'll talk about just about anything. You can find us at kabbage.com, kabbage.com, which I have a funny story about why we called it Kabbage if you want to hear it.
Sure, I'd love to.
If you Google cabbage with a C, you'll see the first definition is a vegetable. The second one is money. It's a Dust Bowl era metaphor, euphemism for money, but it's Kabbage with a K. And so Kabbage with a C.com was $75,000 in 2009, and we didn't have any money. And Kabbage with a K was $1,200, so we went with the K.
Okay, well, that makes a lot of sense to me. I actually love the name Kabbage.com. I think it's a great name. And I think that you guys are fulfilling a really important need in the private business world, especially that lower end where the SBDC, which is part of the Small Business Administration, tends to spend their time. I have two things I would like you to do. The first I should have done at the beginning of the show, and I keep forgetting to do, which is if you're listening to the show right now, please go to wherever you listen to podcasts and leave an honest rating and review for us. It's a really, really important thing. And the second thing I would like you to do is that if we're talking about innovation essentially today, and Kabbage is an incredibly innovative company. It was an incredibly innovative concept, and they're being rewarded really well for that. And I put it together an infographic on systematizing your innovation process. I have a strong belief that innovation doesn't come from above. It's something that's a system. And if you can systematize in your business, you make it ordinary in the way you work. And if you're not innovating internally and externally, you are going to have problems in your business down the road. I will promise you that. So to get it, it's really easy. You go to www.sustainablebusiness.co, that's .co, not .com, /innovation, www.sustainablebusiness.co /innovation. And this is Josh Patrick, and we're with Kathryn Petralia. You're at Cracking the Cash Flow Code. Thanks a lot for stopping by. I hope to see you back here really soon.